It's a choppy start to the year for big tech. Piper even saying the Mag 7 has become the Lag 7 and saying they've underperformed SMID-cap since the October low. But our trader isn't giving up on big tech, and she's looking ahead to earnings in a few weeks for names that could see pre- and post-report boosts. Joining us with her three buys into bail is Danielle Shea, Vice President of Options at Simpler Trading. Danielle, great to see you. Let's run through the first couple so we can get to your bail, which is interesting. And the first buy is Meta. What makes this one you'd want to hang on to, coming off what's been a relatively hot streak?
So I like this stock, Kelly, because the long-term trend looks great. The pullback here was relatively soft into the 21 EMA on the daily chart. But most importantly, they've done really well and they've reacted really well to earnings the past several quarters. So when I'm looking for stocks that may rally going into an earnings report, that's exactly what I want to see. So I like this one, especially with the relative strength that it's demonstrating today. And I'm going to be trading this one ideally up into about 365, 370.
Okay, so we're at about 352, so that gives people a feel for it. Next one is Amazon. And all of these, are these names that you would buy going into the report and then wait and see, or you think the charts work either way?
So, Kelly, what I do with these is I buy and I hold them in long-term accounts where I'm not getting in and out, but also for earnings specifically, I trade them in the options market. So with Amazon, if I'm going to buy this before the report with options, what I would do is when it triggers to the upside, I would buy those options and ride those options for an increase in implied volatility going into the report, but then sell them to capitalize on that rise in price before a vol crush comes through. So with that trade, what I'd like to do is when I start to see that stock shift to the upside, I'd buy it here, targeting about 150, 155, get out before the report, and then trade a post-earnings move as well.
Okay, so that would be about $5 of upside from where we are now. I like your optimism on these because not everyone's feeling it, although Microsoft is a little more consensus. It's only 3% below the November all-time high. You'd be owning this one as well. Why do you think this one, but also some of the others, are going to experience better momentum in the next few days, weeks, than they have so far this year?
So, Kelly, I like the consolidation on Microsoft, and it has typically performed really well during that pre-earnings timeframe. So this is a trade that I like to do quarter over quarter. Generally, I'm going to come in about 3 weeks before the report, buy options on this name with the idea that I'm going to ride it up into the excitement before the news. Now, the problem here is that Microsoft has been a little bit stagnant, and that's the number one criticism that I'm getting. People are saying, Danielle, Microsoft's not moving. And so I'm looking at it and I'm thinking, I'm still going to trade it. I'm still holding it. I would like to see it back up at those previous all-time highs, but I'll tell you that if this stock does start breaking down, that'll be the biggest canary in the coal mine for this earnings season.
And what would that break down? This is kind of a dumb question. So maybe the upside is 380. That was kind of the late November high in that territory. How much downside before you bail?
Let me see. So
before
checking out
368
Microsoft
or so right now on the chart.
So I look at the 50 simple on the daily chart. So that'd really be below 365. Let's give it 363. That would be a key line in the sand where I'd say, you know what, this is triggering to the downside. And at that point, I'd be pretty cautious about continuing to hold this on a short-term long, but I'm still absolutely going to hold my long-term stock.
All right, that brings us to your bail, which is Apple. It was the mystery chart we showed before the break. It's off to a bad start with a couple of downgrades this year. What do you see going on here?
So when you look at Apple, I don't like the way that it reacted to the last several earnings reports. So first of all, that's a bad sign. And when you have that, the stock typically isn't going to rally as well going into an earnings report. So for that reason, I'm not eyeing it for a bullish trade prior to this report. But then also you have some critical breakdowns in this stock. So if you look at the chart, on the daily chart specifically, it's broken down below the 50 simple moving average. That's a critical support zone, and it broke down on high volume as well. So whenever a stock does that, it tells me that there's something wrong with the technical aspect here. So that was one sign, but I'll tell you that the next zone of support is going to be around 180. So if we end up breaking that 180 price point, that is a key line in the sand, and that's where we could really see this stock break down.
Go ahead.
I've been edging out of this stock, and I haven't shorted it yet. But I would short it if it breaks 180.
We're just under 182 now. So that gives you the stakes, people, as we watch that stock as really still a barometer in many ways for the market. Danielle, as always, thank you so much today. We appreciate your time.